Hey guys, happy Sunday. Welcome back. August 11th here. Many of y'all have been following my YouTube shorts where since July I've been giving you my thoughts on the TA of GameStop for swing traders, not for you buy and hold guys, but y'all still might want to listen in because we've been mostly right here on this channel for the swing trading of GameStop over the last couple of years. And if you're interested in making profitable trades on GameStop, maybe this is something you want to check in on from time to time. In those videos, I told you guys my thoughts were that GameStop was likely to head down into that big, bold green box at the bottom there, the $17 to $18 level. And sure enough, it took a few weeks, but we got there. And I got a profitable trade out of being patient and waiting for it to hit that buy zone that I was waiting for. Now that we have several days of bullish momentum, it's time to change up this chart because as you can see here on the chart, we fell through this top demand zone, this thin green rectangle right here. So that demand zone is now invalidated. And so we need to redraw those supply and demand zones based on the invalidation of that one and the most recent information so that we can have the best chance for success into next week and going forward. For those of you that just want the 1-minute version, I put out a YouTube short this morning on this, but it does deserve a little bit longer than a 1-minute conversation. And I want to go through with you kind of the rationale of why we're changing things up. So stick around a minute and let's get into it. As I have redrawn this, you will immediately notice one thing right in the middle of the chart. That previously green demand zone is now colored red as a supply zone. That is what we call a flip zone. When the price breaks through that zone and continues down, then it in essence acts as a new level of resistance or a new supply zone that the price needs to go up and test. So that is one thing that I'm going to be looking at as we go into next week. And you can see as we went all the way down into the $17, $18 range and the stock recovered violently, which is what we want. We want to see a violent recovery in a demand zone. That's when we know it is a strong demand zone. We had that violent day of recovery and several days following that of the stock moving up. And it would be normal then, I think, to expect, unless the market crashes, that we are going to bump up against that supply zone up there, which is right at $22.30 to about $22.90. We need to see if the stock can push through that. And if it does push through it, then as swing traders, that is the type of bullish momentum we are looking for to then see if it can move up to the highest supply zone, which is up there at the $28, $29, $30 range. But for myself, since I'm already traded out of that position, I got in pre-market Monday close to the bottom, not the exact bottom, but I got in at a cheap price. And as it pushed up, as it recovered, I sold that position. So I don't have any GameStop right now. I'm waiting to see what happens next. And the bullish momentum that we had last week is getting us to a great point of interest. Will we push through this supply zone and generate a whole nother leg of upward momentum that I would definitely be interested in participating in? Or are we going to have some resistance here in this supply zone and get knocked back down? That is what I'm going to wait and see. In some of my educational videos on supply and demand zone trading, we talk about reversal patterns, but there is something on the GME chart I want to talk to you about called a continuation pattern. And that is one other important thing to be aware of. And that is this action that happened between July 30th and August 1st, where we had a drop, base, drop. And that is another important level that we kind of want the price to validate for us before we really can say firmly what is likely to happen next. Even if it moves up into this supply zone, this is a key area. This base where it previously rejected and dropped back down, we really want to see as swing traders whether it pushes back up through this or it rejects back down off of it. Flipping to the hourly chart, and if you turn on extended hours trading, you'll also notice that the 200 moving average is very close to where we're trading at, $22.15. That is this purple line swooping down right here at the top of the chart. Now, if I turn off extended trading hours, it does bump it all the way up to $24. So some of you like to look at the moving averages with extended trading hours on. Some of you prefer not to. I'll leave that up to you. But those would be maybe two other levels to be thinking about: $22.15 and around $24. And of course, as you guys know, the 200 often acts as a resistance point, but if enough buyers show up to push the price above that 200 MA, then some of the algos that are designed for technical analysis will see that as a bullish signal and kick into a buy mode, and you could get some continued upward momentum if we can break through first that supply zone and then the 200 MA. The hourly candles on Friday the 9th, and none of them are really instilling me with a lot of confidence to predict accurately what's going to happen on Monday or next week. So for me, patience is the correct thing to do. And if we move up a little bit and bounce down off of this, I will continue to be patient and see if we retrace further down into the demand zone there in green. However, if there's enough bulls that show up that we push through this, then I will consider flipping my sentiment for myself as a swing trader into a more bullish buy type mode. If I just look at the daily chart and the last 5 days of candles, it appears very bullish, like it wants to keep going up. But I'm not going to ignore those hourly candles that were happening on Friday until I see how we start trading on Monday. Remember, as swing traders, patience is the name of the game. Waiting for a good entry, waiting for the best possible lowest price entry you can get, or waiting for confirmed momentum. We're waiting for one of those two things. I don't really care what the price is. If there is confirmed momentum, I will jump on board. You can see back here in June, I paid $29 a share because the momentum was strong, and I sold that up at $60, and then Ryan announced his news and I had to dump the rest of it at 43 bucks. For me, the price doesn't matter if I'm in a confirmed upward momentum, but if it seems uncertain, and it does seem a little uncertain to me right now, then I'm going to wait until I get confirmed momentum, or we get a bounce down off of that resistance, off of that supply zone, and then it pushes back down to a lower price where I feel more comfortable buying for the next leg up. There is some social media hype going on right now about some Chewy's options that were purchased for August 30th and maybe August 16th, $30 strikes. That's something you should be aware of. Maybe that will add to the momentum for GameStop. I think that it did add to the momentum for GameStop on Thursday and Friday. I'm curious to see what happens next week. Thanks for hanging out. Let me know your thoughts. What's going on with the chart in your mind? If you have any questions or comments, drop those down below too. I am Tony DeNaro. Thank you for watching, and I will see ya on the next video.